and welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on how global supply chain disruptions are affecting the outlook for electric vehicle makers. And our guest is Ross Gerber of Gerber Kawasaki. Well, electric vehicle makers and their suppliers have gone from stock market darlings to some of the worst performers this year. While global consumers begin to ditch fossil fuels, already tight supply chains have plagued not only EV makers, but the entire auto industry. And now sharp increases in commodity prices, sparked by the war in Ukraine, have seriously dented their profit margins. In a note published on Monday, RBC said EV makers may have to rethink how they source raw materials. Prices of everything from oil to metals, including nickel, aluminium and palladium, have skyrocketed as the crisis escalated. RBC said the jump in nickel prices alone could increase the cost of a single EV battery pack by $1,000 to $2,000. While Elon Musk said earlier this week Tesla is facing significant inflationary pressure in raw materials and logistics due to the conflict. Well, our guest today is Ross Gerber of Gerber Kawasaki, whose fund holds stakes in Tesla, as well as other companies related to the EV market. Ross, hi. I know supply chain problems have been hitting the car industry for a while, but just in the last couple of weeks since conflict began in Ukraine, we're really seeing spiking prices of some of these commodities like nickel, a lot of which comes from Russia, which are essential for electric vehicles. So has your outlook changed?
Not particularly. In fact, I'm even more bullish on the EV sector than ever, with soaring oil prices making it much more expensive to drive an oil car, even though the price, like Tesla's passed these price increases on to the consumer by raising the price of a EV, but EV save consumers, anywhere from $2,000 to $5,000 a year on gas. So raising prices by $1,000 or $2,000 on a Tesla doesn't even come close to offsetting the gains you make by not using a gas vehicle. So with the rising prices of all vehicles happening, Tesla and the EV makers that are able to make cars continue to maintain very good margins and present a great value to consumers who are tired of paying for gas.
I want to ask about China too. Chinese companies are caught in the crosshairs a bit here as Western investors start to rethink investments in countries that are run by autocracies, essentially. But China, of course, is both a key production base and a key market for electric vehicle makers like Tesla. So does that concern you?
Well, I think a lot of this is politics and a lot of, sort of kicking back and forth over the conflict that's been started by Russia. And it's created a lot of global uncertainty on how things will shake out once this is done. But make no mistake, China is most concerned about stability in their country and economic prosperity. Those are the two most important things. And China knows full well that having a good relationship with Europe and the United States is absolutely key to their economic security. But they do buy a lot of energy and raw materials from Russia, so they don't also want to bite the hand that sort of feeds them the raw materials too. So they're walking a very careful line right now. But I think in the end, the Chinese don't want to be painted in the same brush as the Russians. And I think they're going to work hard to sort of separate themselves out from this conflict.
I know you're keen to differentiate between EV makers like Tesla or Polestar that are already making cars and companies like
Right.
Rivian that aren't delivering yet. So are there some companies in the sector that just aren't a good bet in your view?
Yeah, and I think that that's what we're seeing. So a company like Tesla that's like ramping production of two new factories and needs tons of new materials and supplies during an inflationary period has certain challenges to ramp production, but they're already making well over 1 million vehicles a year profitably. Polestar is on track to making 65,000 vehicles this year, and they might come up short because of supply chain issues, but still doubling production. So we're invested in those companies, but the Rivians and the Lucids were not invested in because they have been unable to make cars at any scale, and they have no history of production of vehicles and no previous success in producing vehicles. So when you look at the car companies that supposedly have cars like Rivian and Lucid, we haven't invested in them and avoid them. What we're really looking at in the EV area are companies that are making vehicles. Like, for example, Arcimoto makes micro mobility, cheaper EV vehicles. What a great solution for times like this. But they're making vehicles and ramping production. And I think that's the big difference between the players. That we have the wannabes and we have the winners, and the winners are the ones we're sticking with.
Ford recently announced it's going to spend $50 billion on EV development. Are traditional automakers like Ford and Volkswagen going to catch up with the pure play EV makers here?
Well, they're quite behind as of now, but if you look at what Volvo did with Polestar, I think that's the model that Ford and Volkswagen want to use, where you spin out and create a new EV brand and company so you're not burdened by the dealer network and the other issues that traditional auto companies are sort of burdened by. So the system that currently exists is an antiquated, unworkable system for EVs. And so companies like Volvo that were smart to create new brands and new management teams around EVs with new ways to sell, service, and manage their EV ecosystem. We love the way Volvo is doing it. And I think Volkswagen and Ford need to follow. And it seems like Ford's going that direction now somewhat. And it's a matter of time till Volkswagen realizes they need to do the same thing.
Thanks so much for that, Ross Gerber of Gerber Kawasaki. Well, before I go, here are some of the top stories in this space. US producer prices rose solidly in February, and further gains are likely following Russia's invasion of Ukraine. In the 12 months through February, PPI rose 10% after a similar gain in January. That data doesn't capture the surge in prices of oil and other commodities such as wheat following the February 24th invasion. And despite a pullback in oil prices, inflation is likely to remain hot as a resurgence in coronavirus infections in China may compound supply chain problems for many manufacturers, especially automakers. Tesla has raised its prices in China and the United States for a second time in less than a week due to those surging costs of raw materials. Tesla has a diversified supply chain, but CNBC is reporting it bought millions of euros of aluminium from Russian aluminium giant Rusal, whose billionaire owner Oleg Deripaska has been sanctioned by Britain. Tesla raised prices for all its models in the US by 5 to 10%, and in China it raised prices on some locally made models by about 5%. And finally, Rivian and Toyota became the latest automakers to announce production cuts due to shortages of raw materials and supply chain issues. Rivian last week cut its production forecast in half to 25,000 vehicles this year, while Toyota Motor said it will scale back domestic production by up to 20% in April, May and June to ease the strain on suppliers of chips and other parts. And that's your roundup of electric vehicle makers. I'm Elena Casas, and this is Reuters.